I actually think Robinhood was dangerous. By enabling free trading without the educational component, it is gambling.
Dub right now is one of the top finance apps.
10 years from now, I really hope Dub is the way that people deploy capital. Majority of investors should never be trading their own stocks. Trading is inherently deeply complex. There are people managing trillions of dollars that do this for their entire living, and they still lose money. 50% of Americans do not own a single stock.
Steven, welcome to the pod. How you been?
Not too bad, brother. Thank you for having me. It's the fanciest set I've been on.
Oh no.
I'm just kidding.
We'll get it fancier for next time.
I love it. I'm ready.
For the audience joining, thanks for tuning in to another episode of Distribution by NewForm, where we interview the Valley and the New York's top business folks and talk about distribution. So again, thanks for coming on, Steven. First of all, you've been on everybody's For You page. Tell me a little bit more about, the story behind Steven and what you're working on.
Yeah, just a kid from Metro Detroit, was born and raised out in Michigan, and parents immigrated from China. And my whole life, I've just been a hustler, right? I've loved making money since I was a kid. And that's been sort of the through line throughout my entire life. And as it happens, I got started trading really early, and I've just seen the evolution of the past 10, 15 years of the modern retail investor. And that got me inspired to sort of build up in the first place a couple years ago. So amidst COVID, trading meme stocks and zero-date options in my dorm room at Harvard. Freshman year, I dropped out a month before finals. So I just didn't want to write another essay and moved to New York City. And it's been 3.5 years of building this company. But yeah, I've always loved building product. I think outside of my hustle work, I was an engineer, nerd kid growing up. I was deeply into robotics and loved really just getting hands-on. I think the big things, just really love to create, just really love to make things. And so I still lead product at the company. I design every last button in the app, and I love it. I'm deep in Figma in the weekends. That's my weekend role at the company.
Don't hear that too often. I mean, team is growing. Like, how big is the Dub team right now?
We're 25 folks now. We're adding headcount basically every week right now. We're scaling up pretty quickly.
Wow.
Yeah.
So tell me, what was the initial inspiration behind Dub? You mentioned you started trading at an early age.
Yeah.
I'm curious, what did you get started using? How'd you trade? Which platform?
For those older Gen Z out there or younger millennials, you'll remember Scottrade. Scottrade was one of the OG platforms. I think they got acquired by E-Trade, which got acquired by Morgan Stanley. It's been this whole consolidation effort. But they were one of the original discount brokerages. And I remember there was a physical location in Detroit that I went to open up my account. Yeah, they had a physical office. You don't hear about this anymore.
How old are you? This is
I was in it was second grade.
No
so
way.
This is I don't even remember how old second graders are, but I remember my parents specifically wanted me to get into investing. When they first came to the U.S., capitalism was a very new concept. They never heard about 401ks, Roth IRAs, and in their first job, they got that, right? So they felt it was really, really important to get my sister and I started in building that capitalist mindset, quote unquote, early on, because that was their dream growing up, and that's why they fought so hard to come to the U.S. So I had a $200 loan, quote unquote, from them. They opened me a custodial account on Scottrade. So custodial account is you technically aren't legally allowed to have a
right. I figured you were too young for that.
Exactly, but for folks under 18, your parents can open up an account in your name called a custodial account. And then you can trade through that. So I was trading that. I was getting destroyed by the $7 commissions back then, right? That's when.
Oh, so this is before Robinhood?
Before Robinhood.
Became a big thing?
Exactly. Trading was not free back then. And I remember just losing money left and right from my first couple stock buys. I think this company is still around, WPRT. It was a meme. It was like a coin meme, small cap stock sort of back then. I remember someone published a Seeking Alpha article pumping it up. And I thought that was...
You were on Seeking Alpha at second grade.
Somewhere around then. It was the early days.
Wow.
And I remember that was my first experience with the influencer-driven investing decision, where I kind of blindly believed this article because it seemed to make so much sense. I dumped all my money into WPRT. The next 3 days, it dumped 50%. And that was my first lesson in School of Hard Knocks. So I think that experience and just watching to the distribution point, the evolution of how our generation consumes content over the past 10, 15 years has really evolved because of Web 2, social media, the influencer-driven economy, where how we make decisions, and especially in investing, is no longer sitting behind a bunch of screens and analyzing the numbers, right? It's really about following people, ideas, and narratives. And that's what we see in every single other product, whether we're using social media, it's influencer-led buying today. Influencers are driving our investing decisions, and also product decisions across the board. And we finally began to see that come to investing during sort of the 2020, 2021 meme stock craziness, all the stimulus checks getting to bank accounts. I think 30 million retail investors came aligned for the first time. And there's just so much hype in the market around all these big narratives that people were just blindly following into. So to me, that was like the ultimate representation of what I experienced with my first big stock loss with WPRT back in the day and believing someone's article. But it was
that's
convincing.
when the company Dub got started, right? Like around that COVID craze. Tell me, was there a catalyst to the company starting? Kind of like, did you see something that was like, okay, I need to start this?
There was. And it was me sitting in my dorm room. I was in all these Discord servers, FinTwit meme rooms, and this underground community that was building rapidly. And it felt like a force of momentum that it was like the small guy, right? The small guy was going up in the major institutions, and you saw these hedge funds try and make their moves. But this coalition of small retail investors, this army was just really building in these different niches of the internet. And what you saw was this belief backing meme stocks like GameStop, crypto going through the roof, star fund managers like Cathie Wood on the other tail of the end, gathering hundreds of billions of assets. And it was this social wave of retail investing that had bubbled up like never before. And it felt pretty incredible to be part of that retail army, right? Because like it was almost like the hive mind in some sense. And I saw an opportunity there. Like, how do we productize this consumer behavior that developed, right? People were really following the big narrative of the group and community that they were in, the big trade that they're put on. What stock were they going after, right? And how do you enable people to follow what someone else is doing really, really easily? Because that's what was already happening on the ground. It was just very inefficient. Everyone was kind of trying to follow this one person that was doing something.
Right.
You'd buy in a day after, or everyone missed GameStop, and you're like, oh, dang, I wish I got in like a couple days earlier, right? So there's all this friction and discrepancy around this user behavior that was shaping and forming investing.
But I think, the negative there was it seemed like a lot of people were posting positions that they weren't in. A lot of people were, kind of doing stuff that they shouldn't be, pumping stocks they shouldn't be. What do you think about that? And does Dub change that?
Absolutely. And what you saw was just a lot of fraud, dishonesty, and a lack of transparency in the system. And I'll even take this one step further back to Robinhood's founding in 2013, 2014, right? They made investing free, which is powerful in the sense of democratization. But what they did not do, and I think is much more important, is the educational piece of investing. I actually think Robinhood was dangerous.
Wow.
By enabling free trading without the educational component, it's nothing better than honestly gambling. You saw the kid that suicided.
It felt like a casino, right? Like, I'll tell you, I used to trade options back in the day like every other kid.
Yeah.
And it was almost like going to the casino. It was legalized gambling.
And I think it is.
Yeah.
If you actually look behind the scenes of the numbers, I'm willing to bet Robinhood is calculated, or any discount brokerage is calculated, their customers probably net lost money.
Wow.
Trading, right?
And most retail traders, it sounds like, are losing money on this.
Yeah. There's various studies in this, but 70 to 90% of retail investors underperform the markets.
Wow.
And it's not hard to believe, right? Trading is inherently deeply complex. There are people managing trillions of dollars that do this for their entire living, and they still lose money. Only 50% of the market, 51% outperforms, right? If the market's going up. So if you think about that, it's something that's really, really hard to do. And in every area of our life, when there's something that's that difficult, we trust the experts with their health, doctors, with legal, lawyers. And we should do that for investing too. But the agency, the access, the excitement of the gambling that taps into human vices makes it something that is different than like trusting a lawyer with your legal stuff. There's nothing, you don't want to risk anything there though. There's also not the excitement of getting the lawsuit, but there's the excitement of YOLOing a stock that could go up 1,000% in 5 minutes, but 90.9%, you're going to lose that money, right? So I actually, to your point, it's nothing better than gambling. It is gambling when you look at the probabilities and expected outcomes. So this goes back to the education piece. How do you still build on top of this excitement around investing, which I think is good, but channel it in a much better and educational way? And that was the thesis of Dub in many ways. How do we channel money into experts where you're, instead of picking stocks, you're now picking people to copy trade? And I think that's really become the whole educational ethos that I think a lot of people miss when they think about Dub and this exciting copy trading platform where you can get the edge in politicians and all of that. At our core, it's birthed from this strong, intense philosophy around how anyone should invest. And 10 years from now, I really hope Dub is the way that people deploy capital. Majority of investors should never be trading their own stocks. And I get it if you want to take 5, 10% of your play money to go gamble a little bit, whether that's sports betting or going to Vegas or doing your Robinhood 0-date options. That's fine. I think everyone should maybe have some of that. That's your choice. But the majority of your steady capital, 90% of your bank account, should be in something that is trusted, is reliable, and has a better expectation of outcomes than trading yourself.
Wow. I mean, the analogy you brought up about doctors and going to the doctor, I never thought of it like that. So, I mean, you're right. Like, but here's the other thing, right? You can look at Twitter. There's a million people saying, "Hey, buy this stock, buy that stock. This is not financial advice or whatever, but definitely buy this stock." How does it work on Dub? So tell me how you follow people on Dub. Do you link your portfolio? Do you get to look at their trades? I'm curious how it works.
Yeah, absolutely. The first key point is Dub is the actual brokerage. We're just like a Robinhood, a Charles Schwab, or a Fidelity. We went through a 2.5-year application process with FINRA, with the SEC, the regulatory bodies. We're actually one of a couple hundred actual brokerages that where you can open a account with us and we actually execute the trades underneath.
Wow, okay.
And that's
a full ecosystem.
Exactly. And that's a really high bar to sort of meet. And we decided to pursue going fully regulated from day one because we knew it was really important to us that we had full transparency into the trades of the person that you're copying on the platform. So when you're someone that wants to get copied on Dub, you actually need to open an account with us and trade through us. Wow. So you actually can't fake your track record. We know exactly what you're doing. And that goes back to the transparency and education piece. When you open Dub and you look at how someone's doing, and before you decide to copy trade them, you know exactly the performance. They can't fake it. You see their entire track record. And to me, it's like, put your money where your mouth is, right? If you're trading on Twitter and you could be photoshopping those gain or loss sort of Robinhood screenshots that you're posting, right? On Dub, you can't fake it. And if I'll be honest, I think 95% of what you see on Twitter, you see on Reddit, is cruff. It's fake, right? It takes 2 seconds now with AI to edit any sort of beautiful looking screenshot with their gain and loss porn. And if you talk to, I think, anyone in the industry, they realize that. But what most of those folks are exceptional at doing is building a massive audience. So with Dub is we want to drive transparency in the system and channel people's money in sort of the right way.
I mean, that sounds like a big problem to solve, and I think the numbers show it. I mean, Dub right now is one of the top finance apps. I just checked the rankings, but you guys are killing it on the App Store. Yeah. How has Dub grown so far, and how do you think Dub will continue to grow this year?
Yeah, it's pretty incredible. We're almost at 1 million downloads on the product.
Wow.
We launched around late February, early March of last year, and we started monetizing sort of in June of last year. And the moment we started monetizing, we sort of really found the model that worked with our customers. It just really clicked.
And what's that model?
So today and this will go into the roadmap for like 2025. Today, Dub is a pure subscription product. You have to pay money. You get a 7-day free trial. So out of the close to 1 million downloads we have much less subscribers, right? So part of the roadmap for 2025 is we've got this massive demand and pent-up audience, and we're probably going to launch a freemium model that will now convert a lot of the customers that didn't want to pay for the product, but also enable us to grow much faster. And the idea there is, hey, Dub's inherently a marketplace with network effects, with the social mechanics, and it's a very social product. And the next stage of growth will really just be unleashing that market demand sort of around us. But even so far, I think we've just been stunned with how good the conversion is. I really do think we've found
it's a hard value prop to beat, right?
It is, and we found really intense product market fit. So for all the founders out there, it's like, hey, I lived through the fintech winter and the consumer winter the past 3 to 4 years. When I launched the company and when we launched a product, I really want to be focused on making money and making sure there's an ROI and positive ROAS for the customers that we're acquiring. And starting out with a subscription model enabled to have that. We have a negative payback period.
Wow.
We're scaling really efficiently. We're growing fast, but I think the efficiency is even more important to me. And it's gotten us to where we are today. But I think to take to the next step and where I want to take the business is really to that tipping point, right? At what point do you have enough customers on the platform where you become that household name and brand? Where from then on, it's no longer about like product risk, right? It's about like scale and execution, operational risk of this company. And that's what we're going for. I think we're almost there. We're getting close. It's been pretty incredible just to see the buzz that's happening just organically. And I'm pretty ambitious though. We still have a lot left to go. And there's a pretty aggressive roadmap in place for the rest of the year.
Yeah. I mean, there's probably 100 million traders you can onboard. Right? There's 100 million people that would benefit from this product. It's basically another Robinhood. We were talking about Robinhood earlier.
Yeah.
What do you think? Give me your hot take give me your honest take on Robinhood.
I love the Robinhood guys. A lot of their early investors or a lot of their early team, and one of the co-founders is an investor. But I will say, I think largely they've screwed over retail investors. I brought this up earlier in the podcast. You saw that one case a couple of years ago where Robinhood got sued. A kid was down $700,000 in his Robinhood account. Wow. And he suicided, right? Like that was a mistake and a glitch in the platform. But what Robinhood did was they enabled so risky options. And so many uneducated people were going into the platform and they just didn't know what they're doing. And this goes back to the point, like I think people net lost money probably in Robinhood. Even if you look 2 weeks ago, 3 weeks ago, Trump coin came out, Trump coin ripped thousands of %. Robinhood listed it in like 24 hours or something. Wow. And since Robinhood listed Trump coin, it was down 60 to 70%.
Holy cow.
If you think about this, right, I get it. Robinhood, not just Robinhood, all the brokerages that get to that scale, the majority of the revenue comes from payment for order flow, transaction revenue. And they're going to do whatever it takes to increase the amount of transactions on the platform, to gather more assets, to make that transaction revenue. Because they're a public company. They're being held accountable to increasing that revenue. And if it's going to be a core revenue driver, they're going to do it. And Robinhood's earning results came out yesterday. Their crypto revenue 3x'd in that last quarter. They crossed $1 billion revenue for the first time. That's probably Trump coin. All the buzz probably had a big play in that.
Meme coins are back.
They are. But in lieu of making that much money, they probably screwed over countless investors that lost a ton of money because they launched those products. And I think that's the gripe that I have with any discount brokerage that's out there. And I think I get it though. We're in a capitalist society and a capitalist model that has public companies, then they need to drive revenues for their shareholders. And they are playing in the system, the ecosystem that they built for themselves that optimizes for that. I think with Dub, our structure is fundamentally different. We win as a company if we are able to successfully build this marketplace where in 10 years from now, people are no longer picking stocks and they're picking other people to copy trade as a primary way to invest. If we make that possible, we're going to be a multi-10, 20, $100 billion plus company. But also, I think we're going to transform the investing lives and make it much better for all Americans, if not people globally.
I mean, you're integrating basically, there's a social aspect of investing, right? I mean, we talked about Twitter, Reddit. Investing is deeply about people now. And following ideas and narratives. But there's brokerages, and those right now are disconnected. So
exactly.
I mean, how do you talk about Dub kind of in your marketing materials, right? Like in your content, how do you think about content about Dub? Are you leading with that social aspect? Are you leading with the utility? I'm curious kind of how you've cracked the first 1 million users.
Yeah. There are a couple things, and I think when I think about content, I like to start with what is something that like people already believe,
Mm-hmm.
right? And we found a lot of success about talking about the edge that people are missing out on by not copy trading or by not following what the experts are doing. So one example is 50% of Americans do not own a single stock. They are
Really?
not
It's that big?
It's that big. 50% of Americans are not participating in the greatest wealth creation engine that capitalism has brought to us, the stock
Mhm.
market, the S&P 500, right? And how can we make that process just easier? If we can move the needle by 5, 10% on that,
Mhm.
that will do wonders, trillions of dollars of GDP growth to sort of the world. And we know in the US especially, right, that the national deficit has been a big issue right now, right? And
Mhm.
like, how do we get creative in ways that we move that needle? That's a big thing, right? When people hear that, they're like, oh, wow, that's probably actually me. Maybe I've got a couple dollars here or there, but largely I'm not saving, I'm not investing. And I understand. There isn't that much financial education. Financial literacy is at
Mhm.
all-time low. And the idea of making it so much easier to invest through Dub, where instead of trying to figure out what stock and do analysis on
Mhm.
that, you're just trusting someone else. And as human beings, we are fundamentally much better at
Mhm.
understanding other human beings and also
Mhm.
identifying who's smart. When we walk into a room, we naturally just, from birth, we're trained to understand, oh, this guy's
Right.
someone that I'd like to be with or invest
Mhm.
in that's inspiring. But you just can't do that with stocks or a company that's all numbers and PE ratios.
Right.
So fundamentally, this is going back to our roots of how do we make decisions and how
Mhm.
do we bring what we already know to the world of investing.
Mhm.
And I think if we do that, and that's what we're trying to do, and we do that successfully,
Mhm.
that really resonates with people. So that angle has
sure.
really worked well in sort of our
Mhm.
content. And the other angle that's worked well in the content is, hey, just talking about the story of the company, the founding story, how it came out of the
Mhm.
retail movement, right? This is really inspired by what most people have
Narratives
felt.
are important. Yeah.
Yeah. So that I think those are the combination of the two things that I think work from a very philosophical sort of meta level. There's
Mhm.
obviously more nuance to the
Right.
execution of the content, but I think it's iterating around those value prompts, right? And then churning out a pretty big volume of sort of different angles and then
Mhm.
testing that really quickly. And then you'll find some that work and some that don't. Sometimes the difference of what the background image is or
Right.
whatever. And then you go from there.
I mean, drilling down, right? I think Dub is one of the new age consumer products that's really growing through content. And that's why we
Yes.
brought you on the show,
Yeah.
right? I think you guys are pioneering this kind of new age of growing fintechs. And, like, I'm curious, like, what platforms are you most bullish on? Has, brought Dub the most users? And, how do you plan on doubling down on them?
Yeah, great question. So far, we've found the most success on Meta,
Mhm.
and
Is that Instagram or Facebook?
mainly Instagram.
Okay.
And I was skeptical at first when I first got into sort of content and we first started marketing and doing both organic and paid.
Mhm.
But I've grown to realize, and I think this might be a little controversial, that I think Meta will continue to be the winner in the main ad content platform
It's hard to beat.
for the next 10,
Yeah.
15 years, right? Because they're one of the few that truly cover the entire Western hemisphere. The
Mhm.
ad inventory of Meta is boundless. And they've truly monetized the majority of any given human being with the phone's daily time. And we've tried
I think
all
it's
these.
crazy. Their LTV just on ad revenue is, I think, $100 in
That's
the
wild.
US.
It's a completely free product.
It's a completely free product,
Yeah.
but you're paying $100 a year essentially
Exactly.
in your attention.
And it comes to Meta because we've tried all the other platforms, right? We've done Reddit, we've done all these Snapchat, and all these things. And what we've realized is just that there's a very quick scale cap that you hit because the ad inventory is just so low
It's
compared
not
to
the
Meta.
same.
You just can't deploy as much money. So, and also from a content standpoint, where I think Meta is easier is that there is also a lower bar on Meta for creating content. And the reason for that is when you're on Meta compared to when you're on Twitter or Reddit, the mindset that you're going in when you're consuming content is very different. When you're on Meta or let's say TikTok, it's kind of passive. You're at home. Your brain's not really on nearly as much
Yeah.
or engaged. You're not information seeking. Versus when I'm on Twitter or I'm on Reddit, I'm going in for a specific subreddit, a thread, some thoughtful piece that caught my eye, and I'm truly engaged in a very intellectual way. And when that intellectual engagement is at a high level, the expectation of content that surrounds that increases as well.
That's a hot take. Okay.
So the passive consumption on Meta and TikTok just lowers, I think, the bar, and it activates that more passive way of a human to react and consume, and it's more dopamine driven in many ways, right? So
I mean, you see this in the average click-through rates, right? Like we advertise on Meta, obviously, we advertise on other platforms. Maybe it's the algorithm. I don't know. But you're right that people are more receptive to ads on kind of passive consumption products versus, something like Twitter or Reddit.
Yeah. And I fundamentally, even for me, if I'm looking at myself as a consumer of all these channels, is I'm just a lot more skeptical when I'm on Reddit or Twitter. They're fundamentally more anonymous than sort of not. You can sort of hide yourself. And also the community that's built on these platforms is naturally evolved to be more skeptical, right?
Mm-hmm.
If you put a hot Reddit post up, you're going to get destroyed in the comments. Versus you put the same
Reddit's
thing on
the
Meta.
worst. Reddit is the worst.
Meta's relatively kosher, right?
Yeah.
And people are actually supportive of most things. And you can just see it by the comments alone. And we track the comments every day. We think that's a really important reflection. One thing from a product side is the comments is a form of feedback. We
heard that on the
really
last
seriously.
episode. I mean, when we were talking to Zebo, it's like comments are content. Comments, you should be focusing on that.
Truly.
Like, I mean, I've seen some of the comment sections. Some of them are crazy positive. Some of them are crazy negative.
Crazy negative.
Get off my For You page. How do you handle, I guess, comments on your content?
Yeah. I think we do moderate to a degree.
Mm-hmm.
Like if there's some profanity and stuff, I think actually Meta does a pretty good job, or most of the channels do a pretty good job. So we kind of just more passively consume the comments, right?
Mm-hmm.
It's like feedback for product, feedback for me, how we can make sort of better content. And we're pretty laissez-faire about it. I know some other sort of products and companies get a little bit more aggressive about moderating the comments. But to me, it's like keeping it as natural as possible, keeping it as authentic as possible, where I think the folks who are going to the comments, they're looking for the good and the bad.
Right.
And I don't want to drive and change a perception of something that people are seeing live, right? And I think it's real important that people understand like the goods and the bads of a product.
Mm-hmm. Mm-hmm. And, I remember I saw on your Instagram, there was a giveaway or like kind of a trading competition. How'd you think of launching that? How do you think it's helped Dub grow and cultivate the community?
Yeah, so we recently launched the Dub Championship. It's the largest investing championship in America by cash prize. It's a $100,000 tournament.
Wow.
And the whole concept behind that was, how do we get talent excited to come to Dub, right? If you think about what's worked in, let's say, other areas like sports betting, or if you're chess championships, right? Like a championship is very in tune with sort of that American ethos,
it's competitive,
sort of winning the competition, right? And you've seen throughout history, it's worked to bring out people from the woodworks.
Mm-hmm.
And a big sort of piece of Dub is, how do we not only bring on existing talented quote unquote traders to be copy traded, but how do we build a platform where the next Warren Buffett, who's still a kid in college, right, has a chance to be put on the world stage and has an opportunity to sort of win and be recognized by other people. And that's a core philosophy of Dub, is how do we drive home that exposure for anybody? And
you're thinking about it like a true marketplace, right?
Exactly. And how do we curate? We win if we curate the next generation of Warren Buffett's, right? And I want people to really see Dub as a place to be able to do that. And that's really goes to the supply side of the marketplace of like, how do we almost build this fun in a box product?
I mean, this is fascinating to me because so it seemed like you started out more kind of, single player product, focusing on kind of acquiring users. You wanted to get to kind of that base level of revenue and ARR and usage, right? Now you want to kind of take this to more of a marketplace, grow with scale. I think you're thinking about it the right way. Like, I'm curious, how'd you seed their initial audience of traders or people to follow, right? And like kind of built that gated ecosystem so that people would, subscribe and enjoy the product. How did you solve that kind of cold start problem?
Yeah, absolutely. So I think your analysis is spot on with the single player game to start. And what we did is we actually launched an internal hedge fund. So when we first launched the company, our head of investments, he's been a quantitative hedge fund trader. He's done billions of dollars of volume in his career. He's an MIT physics PhD. And what he did was he managed and built a couple portfolios that were seeded the platform, quote unquote, when we launched. And those have done incredibly well. Some of the ones that we managed are the Nancy Pelosi portfolio. We take her filings and trades and replicate them on the app. And she's up 123% when I last checked. Versus 48% of the market. She's beaten the market by 80%. So we've launched. It's one of our top portfolios. But beyond that, once that marketplace sort of the seeding got going, what it did was it showed, and I think we were very intentional about designing this in the app, where even our internal hedge fund just looks like another user on the product with a profile that you can sort of click into and see the trades that they've done, who they're copying, but also what they built. And since then, it's been just incredible organic growth, even on the supply side of the marketplace. Today, we have hundreds of creators who've made hundreds of portfolios. If you look at the leaderboard,
are they able to monetize? Like, how do they get paid in any way? I'm curious how it works on the creator side.
Yeah, absolutely. So there's, for the top creators who are, you need to meet a minimum bar of sort of a track record, tenure on the platform, and showing that you're not just sort of lucky, right? Once you meet those criteria, you can apply for the top creator program in the app. And the top creator program, you basically get paid on a discretionary basis. Essentially, how popular a portfolio is, we'll pay you based on sort of that.
Kind of like an AUM base?
Similar.
Okay.
Yeah, and we've got a model behind the scenes that we use to sort of pay you out. But the whole idea is like the better you're doing, the more followers you're bringing, the more that you contribute to the network effects in the marketplace by bringing us more customers, the more we're going to reward you essentially. And we've got
now your users are your own kind of power marketers. I mean, that's the best way to do it.
100%. And that goes to the ultimate vision of like PLG, right? Like people talk PLG. I think it's an overused right term. But at the end of the day,
tell me about it. Yeah.
At the end of the day, right? Like the best products, if you look at the public companies, the top 50 tech companies, and let's say, or even 10 tech companies in consumer, none of them, most of them didn't grow through paid advertising and paid content. They grew through organic product-led growth. And I think that's way more difficult today, right? We've saturated the majority of customers. Competition has gone way up over the past 10, 15 years. All the low-hanging fruit is gone. But I think to build a truly enduring public company, you need to have a massive component of low CAC, product-led growth that drives virility, where your customers, especially in marketplaces, your supply is acquiring your demand, and vice versa. I think paid marketing is a big component to get there, and that's been worked really well for us. But from a founder perspective, it's time to reinvent ourselves at different points of the company, and we're at that inflection point where what got you here will not get you to where you want to go. We've been lucky where we've already found a lot of success in our marketplace. We haven't done much on the supply side, but we already have hundreds of people making good portfolios, and the majority of 99% of portfolios and creators in the app are sort of all organic. And I think they delivered, at this point, millions of dollars of returns for our customers. Our top person's up like 230%. So I think that goes back to this idea of like, hey, we need to double down on that even further now.
Yeah.
And now,
you put it well with like the distribution aspect. I mean, we wrote an essay about this the other day, but our thesis is actually software is no longer technology. So if you thought about technology and the things we associate with it, product-led growth, high margins, natural, organic, hey, like you made some cool tech, now you're at 100 million ARR. And it's fundamentally not like that on the consumer side, at least not anymore. I mean, if you think about the last, PLG company, I don't know, maybe you could ChatGPT.
Cursor, a couple.
But Cursor is like B2B. I mean, sure, it's like individual developers use it, but it's not a consumer product. And if you think about the last consumer product before that, maybe Snapchat. I mean,
Snapchat, TikTok,
TikTok, like
Clubhouse died.
It's really hard to crack that PLG. I actually agree with you that look at ChatGPT. It was revolutionary technology, tapped at something really fundamental. And sure, they get 100 million users as a result pretty quickly.
Yeah.
But if you think about the average kind of consumer product these days, it might be 10% better, right? And I think that's where, paid advertising comes in play, right? I think you can build 10 million, $100 million companies purely through paid. I mean, you see it with e-com all the time.
Yep.
But you're right to get to that, billion, 10 billion, $100 billion company.
Yeah.
You need something else. You need that network effect.
Yeah.
And that's what you guys are doubling down on, it
Absolutely.
Sounds like, this year.
And no, I actually completely agree with you. And I view it as a tripart play, the triangle. You want to have and what we did talk about is owning organic distribution. Consumer companies, consumer tech apps need to have a media presence and a media arm. And you see some of the best companies in the space having that organic distribution that early on, it may not get you past, let's say, $10 million of ARR, will get you that initial surge. And also the brand. And I think that brand and building trust is so intrinsic to how we make decisions.
Especially as a fintech.
Exactly. And having a really powerful organic brand that truly you didn't buy those followers, they had to trust your brand is really powerful. And I think that sends a strong message. That's one.
How are you guys doing your organic content? Because right now I'm seeing a lot. I mean, it looks like just any other finance page, right? And like it's adding value. Like how are you, how are you adding value in organic content? Because I think a lot of people conflate organic with paid, right? Like your organic content isn't ads, right? It's different. How do you think about it?
Yeah, right now organic content, we've actually found a lot of success just following sort of what a lot of our channels have done. It's doing breaking news. I think there's a lot of pages that sort of do this now, but we've done it in our own unique way where breaking news is always something that people are going to follow. Everyone has their own breaking news sources, right? So we know there's product messaging fit in a sense there already, right? It's something that people want.
It's product channel fit, really. That's what we think about.
Product channel fit. Yeah. Spot on. And then we thought about like, hey, let's build on top of that, but what is a unique spin that we can put that is more related to Dub than not, and build that brand equity in a sense where they come to realize us as like, hey, I'm going to go to Dub for breaking news, but what else is that extra layer that convinces me to use Dub as that core channel? And that's the insights that draw back to sort of the product. When we do breaking news, we try to do that one layer deeper level of analysis that has almost even a call to action for, let's say, maybe a portfolio in Dub that can be related to sort of what you see. So if you want to make an investment decision on this breaking news, we bridge that gap for you. And I think a lot of times when most of the breaking news these days that we're consuming, let's say everything around Doge, it impacts the market, right? So that's one thing. And the other thing is like, I think people have so many different channels and sources to choose from. The differentiating piece is how do you give that extra layer of insight, that second dip of the dopamine hit that makes people feel like this is a little bit more valuable. And that 10%, 20% edge sometimes is all you sort of need. And that's what we've actually found with our content. If you scroll through our organic sort of content when we do breaking news, there's always a second slide that does a little deeper dive into what exactly
I follow the page.
Makes this successful. And that's been growing like weeds. I think we got, we're still building up. We've got around 100,000 followers on our Instagram right now, but the engagement rates are going through the roof. And we're definitely scaling sort of that up. But I'd say there's still a lot of work and growth to do there. One place that we haven't tapped is just video content. We're doing statics right now because it's much faster to ship, and most breaking news is more attuned to statics because you want that to be really timely. So the next step is like, how do we sort of do even a meta-analysis of some of the breaking news with sort of video-driven content that has call to actions that sort of delivers more
like
value.
Read more on the Dub app, right? Like,
yeah, exactly.
Yeah. I mean, I think you guys are a perfect example of like what we call content-led growth, right? Like, I mean, you're talking about, hey, how can we build a moat around our distribution?
Yeah.
Right. And I think the future of consumer companies, there's product moats, there's data moats, whatever, but I think content moats are becoming more and more important. So how do you differentiate yourself from, competitors? Obviously, it's a more niche product. How do you think about as more competitors, enter the space, maybe Robinhood introduces a copy trading feature or something. How do you think Dub wins that?
Yeah, great question. And I would say I would actually push back or disagree on being a niche product. I think maybe today we are perceived as a niche product, but ultimately
how many products let you copy trade?
Yeah.
Right? It's a couple?
Yeah, maybe a couple, and people use the term in different ways, but we're the only regulated brokerage to offer copy trading in the way that we do, where you are truly automatically following the exact same trade as the person who you're copying. And other platforms, a lot of them, it's questionable how they operate the business, but they're kind of overlays on maybe other brokerages. You plug in your Robinhood account.
Interesting.
And fundamentally, there's going to be a big lag, right? And you won't get the exact same trade as the person you're copying.
That's always my biggest fear, right? Like, I mean, honestly, the reason I'm not, I'll be honest, I don't copy trade or kind of tune into a lot of people's portfolios. I see it all the time. I see the crazy gains.
Yeah.
But I was always scared of the timelines. Like, by the time I buy it, it's already done.
Exactly. And also, what if they're front running, right? What if they're doing another trade? There's very little transparency when you don't own the actual brokerage account. So with Dub, when you're copy trading someone, you actually get the same trade as the person who you're copying. So when that creator, let's say, quote unquote, makes a trade that you're following, we take his or her trade and we merge it together with all their copy traders. and we go out to market with one big trade that guarantees everyone gets the same price, the same execution. And then when we get that trade back, we allocate it pro rata back to everyone's accounts. So that's really complex technology. That's what like hedge funds had built underneath the hood. But we felt that was imperative to ensure that we're building a trustworthy product where we're actually giving our customers what they see. So the returns are one-to-one exactly. And we pride on that, right? We were truly, I think we built the best products, but the downside to that is it took a long time to build. It was a pain to stand up a brokerage from the ground up and to build this complex routing technology. I think that gives us a strong edge, right? There is a technical and engineering edge. Sure, maybe Robinhood could throw $100 million and a ton of engineers at this, but I think like there's always that innovator's dilemma. And also, I think the final thing I'll put to this sort of point is from a product sort of philosophy perspective and sort of where we want to go with sort of Dub and what we're creating on the distribution side. I would say the ultimate piece of us winning is truly unlocking the network effect growth that a marketplace needs to have to be self-sustaining. So I'd say our content piece, our content arm that I think we're doing a great job on, our paid ads that we're also doing a great job on, those are supporting pieces to get us to a point where we reach this ultimate, almost like tipping point of the marketplace where there's enough liquidity on both sides from supply and demand. And it's high quality enough where we have some of the top traders in the world. And I think people will just naturally flock towards them and believe that this is a valuable product. And the same thing on the demand side. If we have enough customers on the app with enough AUM, with enough trading activity, the top traders are naturally going to want to come to Dub because they're going to get that exposure. They're going to be able to monetize. They're going to be able to make money for the first time. So I think to me, like that will be the ultimate engine that sort of builds upon itself. I think once we're there, I think what makes us kind of different than a Cash App or Robinhood, those are all single player games. I guess Cash App has the sharing sort of with friends, but ultimately it's a debit card, it's an investing account. It's like you kind of go in and you come out, right? The social element, it's not the same way as you think about sort of a TikTok or a friend graph.
Are you scrolling Dub? Like you're not scrolling Cash App, I guess, right?
Yeah, exactly.
But you're scrolling Dub, you're saying?
Yeah, in some sense, right? And we're still working towards that where we're in the process of building out more social features in the product, but it kind of makes sense, right? If you're following someone on the app or you're copy trading them, you're going to want to see their content. You're going to want to see their update. And this goes back to, I think, a strong belief that I have for our customers is for most retail investors that are out there who know that their financial lives and sort of their savings are a massive part of their sort of future. And I think as a society, we've never been more afraid than before of like the next day brings and where our cash is going to go. Yeah. Ultimately, what we're doing is we're providing someone the feeling of safety and belonging and putting a suit of armor around them where now they're trusting someone else to sort of deploy their capital for them. That's actually good, right? And we crave that as human beings. And fundamentally, we're just providing one of the pieces on sort of Maslow's hierarchy of needs for our customers. I think when we win that, we sort of have that be the brand image that people think about and resonate with because we built this marketplace that truly is surfacing the best quality of investing decisions and strategies and creators that you can follow. We will have sort of gotten there.
I mean, you bring up an interesting point with Maslow's hierarchy. Like the world of content, you can get into the nuances and everything, but at the end of the day, you're trying to tap in at one of those desires, whether it's, safety, trust, something like that. I mean, how you mentioned, Dub's grown through paid ads quite a bit. How have you tapped into those, themes in your content, right? Like there's a good bit of social proof. There's, obviously I think you had an interview on TV that you're putting out. That's doing really well. I'm curious how you're thinking about tapping into that in your ads.
Yeah, great question. On the ads, I'd say when I think about sort of just what drives decisions and a lot of consumer products, you can relate all of them to one of the 7 vices.
Right.
Think about DoorDash, it's gluttony and sort of laziness. For Dub, it's a lot of
I've seen this Twitter thread so many times. It's like, the 7 sins and the big companies that dominate them.
Exactly. And the idea is like with Dub, right? It's fundamentally greed and everyone wants to make money, and I think we are in a society that sort of drives that home to a fine degree, and it goes back to sort of the education piece. How do we make that healthier, right? You can't change our vices. We're human beings, right? But how do you improve that by 10, 15, 20%? So that's fundamentally a core piece of how we think about our content. And we can't promise returns, right? We're not promising.
It's a very sensitive industry, right? I mean, like, especially you're advertising a fintech product. It's a brokerage on top of that, right? So there's probably a bunch of rules around that.
Ton of rules.
How do you balance, not getting completely screwed over by Meta or some regulatory organization and tapping into that, right? I think a lot of, especially fintech, struggle with that. And I'm curious how you guys have handled it.
Yeah. A little bit maybe a controversial take. I think a lot of the regulations and restrictions that put in place, I think fundamentally are designed at the end of the day to protect customers. When Meta's releasing their new financial disclosures thing that you have to add to all accounts, it heavily restricts the type of people that you can target now. You can't target by a lot of interest groups anymore, age groups. It has to be more generic. But I think that comes from a root of Meta maybe talking to the regulators or someone internally deciding like, hey, we don't want financial education discrimination or pieces around that. I think that drives like core values that we want to uphold in our society of being fair and equitable to anyone that's out there that might be looking at a financial product. So I actually think a lot of this, the rules that were put in place for the game that we're all playing come from a good place. Execution can vary. There's always human error sort of in there that might be tough to deal with. But as I think about this, like, hey, if we do not control the rules of the game, we need to play by them as much as possible. And I think what our team has done really well is we're really agile in terms of adapting to all the changes. We've had some crazy outages on Meta. We've had different policies and disclosures and random ad rejections, right, that are unexplainable.
Well, tell me about it. Yeah.
So I think you just this is where resilience and grit is immensely important. I can't predict what Meta's going to throw at us tomorrow or whatever ad channel is, but what I do and what I can predict is my team's and my confidence in my team to be able to adapt and change around all those frameworks. I think this comes actually down to hiring. Like, you need to get someone who has the right mindset to operate in a very ambiguous and difficult environment of running ads or even just running organic content and adapting to the algo, right? I think that's what makes fundamentally some of the top companies.
Yeah, I mean, we talk about this a lot. You need a content engine. I think a lot of people are just like, hey, come make a great ad once and bye-bye. Like, I have a $10 million company. But it doesn't really work like that, right? Like, you guys are pumping, I don't know how many ads are you pumping a month?
Oh, a lot, like hundreds, if not, thousands. Yeah. We iterate a lot.
So you can always get better. Stuff gets tired out, right? And I think most people don't realize that it's not just do it once and just forget it.
Yeah.
Especially in an industry like fintech, you need a content engine to really keep driving that growth.
You do, and just probabilities, right? And it just goes to the algorithm's constantly adapting. What worked yesterday may not work today. And this one ad, you just need to take a ton of shots on goal, right? And then you may not know specifically this one ad's going to work, but if you're taking hundreds, thousands of shots on goal on a daily, weekly, monthly basis, you're probably going to have one that works. And that goes to your piece of the content engine. You need to consistently put out really interesting stuff, and you need to sort of play a bet, right? And this is where I think the quantitative finance mindset is really sort of helped our team. And hiring people that take sort of that very empirical and quantitative approach to building great marketing content. And a team that I'm really inspired by is like what Wish did in the early days. They invented sort of the product SKU carousel sort of advertising component sort of that Meta now offers. And they, through the Meta APIs, they were launching hundreds of thousands of ads, and they had testing and sort of the budget per ad to sort of understand, is that ad working now to such a low point that they were able to scale so quickly to understand, hey, what of our million products is actually going to work? What is the ad that's going to drive home? So I think and what I'm seeing on the ground is there is the content engine creation piece, and there's a big creative component involved in that, but it's increasingly becoming a science. And if you are not taking a scientific approach to your paid content engine or even your organic engine, you're already losing.
Yeah. I mean, we say this all the time. I mean, like I think we did an analysis on probably $100 million or more of spend. And across all ad accounts, if you look, half the results are driven by 2%, like 1 in 40 ads. Yeah. It's roughly 2 standard deviations away from the mean. If you think about it, there's no other reason to expect that not to be the case. We talk about trading and returns. Half of returns probably come from that 2% of stocks,
Yep.
right? Most are losers, and then you have the winners that really carry the indexes.
Yep.
And it's the same thing with honestly, with any kind of field of meritocracy, I'll say.
Yeah.
I forgot the rule. I think someone...
It's like the 80-20 reverse. But
I know,
yeah.
but there's something, I think it was like Zipf's law, something like that, where someone looked at, I think, citations in like academia.
Yeah.
And I think like half of citations came from the square root of the number of researchers in a field. It was like a really fascinating law. And we see that all the time. So if you take like the square root of ads, we plotted this on a chart. If you take this, like let's say there's 1,000 ads, you take the square root, I don't know, it's like 30. 30 of the 1,000 has driven half the results. And it's
incredible.
And like, the more you create, I think the higher the bar is for content.
Yeah.
Right? Like we see this all the time with, the first time, like and maybe you can share more. The first time you got started on paid, maybe every week, was a new winner, right? Like you found a new ad that really worked. But now it takes volume, right? Like at scale, you need to keep up the pace because, if you stop, if you start walking instead of running, you're already losing steam. Yeah. I'm curious, like, how has that evolved from your early days to now scaling up your ad operations?
Yeah.
How has that process evolved for you guys?
I think it's very similar to what you described. And I think about this in a framework of sort of two things, right? For any given product, there's only a handful of value props that really sell. Right. And you can kind of intuit that. There's like 4 or 5 things that will resonate, and you just got to sit with sort of your product. And you should actually just know that as the founder or the creator, right? You should know what's selling and why you're creating this. But then 2 is like, how do you package that messaging of the couple value props? And this is where you have to be really in tune with what is working today. Being on top of different trends, being on top of different formats. And one thing that our team does religiously is we look at what are the best ads. We scout out constantly and go through the meta ads library of like, these are the winning formats.
Not enough people do that. Yeah.
Exactly. And how do we programmatically repackage these core value props that we know that work and resonate, that have product messaging fit, and deploy it in different forms of content in fresh ways to give people honestly a different perspective and a way of looking at the value prop. And I'd say like for us, like we've noticed, I don't have the empirical data on this, but it usually takes seeing an ad or the same ad 2 or 3 times or seeing that same messaging a couple different ways before they actually convert. At least. And like it takes 8 years to sort of build a true brand, right? People need to see and hear and understand your product in so many different angles, right? And I think that's really important to us and sort of that core philosophy of like, hey, how do we take what works and how do we deploy it in different ways and how do we build this perception around the product that we want to create. Ultimately, you can engineer it, right? Like on average, like just look at the numbers, the frequencies, and sort of from a targeting standpoint, you can sort of tactically map out the flow of when someone sees it, how do you want to retarget them, and I think there with the evolution of Meta's algorithm, broad targeting, I think does that a lot better now. I'm assuming like the retargeting that's probably built into some sort of Meta's AI.
Of course, I mean, if you look at any campaign, they'll retarget naturally.
Right, exactly.
You used to be expected to do that your own.
You used to have to do that manually.
Now they're like, no, we got it. Don't worry.
Yeah. But I think that's how I think about the logic, right? And a lot of, I think people, even when I first got into paid ads, I was like, oh, let's just build a winning creative, but there's actually a math, science, and process behind mapping out the evolution of sort of the advertising life cycle of someone from the very first contact with their product, when they see it again, and what are the probabilities of conversion at each point that they see it again, and how do you serve up the right piece of content at each one of those checkpoints to drive them to ultimately find value and enough value to convert.
I think this is why diversity is important. I mean, you're right in the sense that like, you can only pitch a product in so many ways. I mean, even products with multiple features, I mean, there's a finite number of ways and you're going to run out of those.
Yeah.
The thing that you need to figure out is how can I tell this story in a different way, visually, in a different style. So, maybe statics or telling the story of Dub really well, but eventually need new formats, whether it's street interviews, podcasts like this, news interviews. How has the team evolved those kind of content formats, right? Like, are you guys still focused on statics? What works for you guys, I guess, from a content format perspective?
Yeah. So far, we've found a lot of success iterating on statics and utilizing news formats. So like what we've realized is that most of our content consumption, let's say on Instagram, comes from a couple big massive pages like Puberty, for example. They've got like
Yeah.
100 million followers.
Wow.
And they follow like a format for every single post that they make. And for each one of those posts, you kind of, as you're seeing it, and let's say you've been following them for a couple of years now, there's a sense of trust gets built in that sort of post. Your brain recognizes it the moment it sees it. And if you can lean on these behavioral patterns that people have already built by consuming other trusted content and your own ads and following maybe a similar format, borrowing some of the stylistic elements, it gives you an edge because like people naturally just trust the look and the feel of your ad a little bit more.
I've seen some of the ads. It looks like any honestly organic post, right? Like
Yeah,
it
really
blends in
does.
seamlessly.
It does.
And I think you guys have done a great job of that.
Yeah, and we found a lot of success, and this goes back to just, I think, just being really methodical in the process, understanding what drives the decision, what are likely small edges that we can sort of build, and when we're thinking about a systematic hedge fund like Citadel, it's not like one big trade makes you all the money. It's a lot of small things add up to sort of generate outsized returns sort of over time. And and I think our team's done a phenomenal job of that, but it takes a lot of resilience and grit, constantly be on top of the new research and the content. And I think it all comes back to sort of the team and getting someone who can also evolve this process. And what I'm telling you today may not work in a little bit because now everyone's going to do the same format. So you have to constantly roll the punches. And I think that's what makes it a great content marketing
I think,
team.
speed is always underrated. Just the pace of execution. And I think this is what we see in you guys and like the evolution from when we first, I think met maybe over the summer, like June, to now it's impressive. So thank you again for being on the pod. What's the vision for Dub this year? If you had to name a single thing that you really want to do this year for Dub, what would it be?
Dub will be a household name by the end of the year, and we will bring copy trading and make people believe that this is the new way to invest.
Cheers to that.
Yeah,
Steven, thanks for being on the pod. And viewers, thanks for tuning in. See you in the next one.